Welcome back to the channel, guys. Hope everybody is enjoying their weekend. Let's look at the last week of September, what it has in store for us. First, let's look at what we have coming up in the in the economic reports and Fed speaking for the coming up week. So we do have roughly about 22 people from the Feds talking this week. And we also get Powell talking again on Wednesday. So we got even tomorrow before market opens, we got 8:30 Feds talking, and then the Boston president starts talking at 10. So keep all this in mind because whatever statements come out, this does affect the market. So keep all these times in mind. I would print it out or make notes of it if you are deciding to take a trade. Just look at it if there are any of the Feds talking at that time. So definitely pay attention to that, okay? So now let's go look into what other things are happening in the world. All right, so every bank around the corner in the world is tightening their financial conditions policies, because of the inflation problems. So until the inflation problem is down, I don't think so anything is going to slow down, whether it's with the interest rates being raised by, the Bank of England or Germany or, the US Feds are raising these rates. So I still think we will probably see another 75-point basis in November, probably 50-point basis in December, and then come February, we'll probably get another 25 to 20 basis points. So by the time we're done with all these raises in the interest rate, I would say we would be somewhere close to 4.5 to 4.75%. Again, nothing is set in written. Anything could change, but this is what, just looking at the previous history, what has happened, even though we are in a little bit of a different situation, but I think that's probably is what I'm thinking that could happen. And maybe come September of next year, a year from now, and Fed starts to, loosen some of these rates or loosen some of these financial conditions, that we do start to see some of these interest rates come down. So I don't think so until for another year or so that we will see any of these rates coming down anytime soon. Because if you look at the dollar, let's pull up the dollar chart here. Dollar's been almost 25-year high here. So look at this. This is the daily chart, and it still has a room to run up to the 114.74, and it's going strong. Every pullback has moved up pretty nicely. This is the pullback that we got when we had that July-August rally. So this is the pullback we got. So the way we are running up here, any pullbacks, it seems like it's gaining a strength and it moves up pretty high. So if you see a dollar weakening, and we will see then our stock market start to move up. So always pay attention to what dollar is doing, right? So the thing right now is when we import goods, our dollar is strong against it. So foreign currency, those imports cost us less for us to buy in a dollar, right? But in terms of when we are importing, we're importing deflation. But when they are buying it from us, they're buying in inflation because dollar is strong. So for example, let's say if India is buying something from the US, they're actually paying double the price what they were paying before, or even a little bit more now, because dollar has been so strong and the Indian currency is a little weak now. So we are importing back in inflation, even though we're importing back to the US in deflation. So always keep these things in mind when you're looking at prices and all those things. The other issue that is that everybody keeps saying it that we're in a different place when it comes to housing market. We're not going to have that kind of bubble. We are back in 2008. It's not the same thing. Yes, I agree. It's not the same thing, but ask yourself these questions. You know, Even if you're locked in a mortgage rate that is lower right now, but to make those payments, you have to have a job, right? So if people start losing their jobs, even if your mortgage payment is lower, you're not going to be able to make the house payment, and then people are going to start selling. And then think about it, the people who bought it at the high of it, or who's, whatever little percentage of people's mortgages are locked in at the high interest rate, and they start losing jobs, and they bought it, let's say a home for a half a million, and now they're having to sell for 30% lower than that, or 20% lower than that. So yes, there will be some sort of you know pullback in the housing market as well. It will be a different than what it was before, but just these questions to ask yourself, like if um, the housings are starting to come down and people are starting to lose jobs and things are getting worse, obviously you're going to have to sell your home if you can't keep up with the pricing, right? Like last week, the president of Federal Reserve told the American people that housing market needs to be corrected. So, in to me, that's a warning, right? Like if you have the Fed president saying that, that's a clear warning to it, warning signal. So do listen to when these people are talking, making these comments. There are usually a lot of clues in there. So please pay attention to what comes out this coming week. What are they going to be starting to say? So let's look at some of the tickers. And the other thing is the U.S. 10-year is pretty high right now. So let's look at the U.S. 10-year. Look at that. So anytime you have the government bonds that are running and that are doing really well, you are going to see your stock market starting to pull back. So the things that you want to watch when you're watching your tickers is your, VIX, obviously, dollar, US 10-year, the 2-year, the 30-year, all of these bonds, you want to pay attention to it. What is, how they are doing. If they are pretty high, if they are running, I bet you any money your stock market will be pulling back or coming down pretty significantly. So pay attention to that. All right. So on SPY. So out of all the countries that were raising rates, like Bank of England raised their rates, Japan was the only one that did not increase their rates. So they were the only ones to hold off for now, and even Germany raised their rates. So and Japan started actually selling their yen, and they started buying the US dollar. And if you go back on to the Thursday morning around 7 or 8 o'clock, I believe that's Eastern time, you'll see the market pull back pretty strong. And that was because that's the news came out of Japan. So all of the news is that are related to the world market also does affect our stock market as well. So please always pay attention to all those things. How does it impact? I always like to make a note for myself what's happening. What did any ticker I'm watching, I normally pay attention to SPY, SPX, or the futures, wherever you want to make a note of it. See when that news came out, how did the US market react? What did happen? Make note of those. A lot of the times, what I'm seeing, like as you all know, I'm pretty new as well in the market. So all of my learning is going back and reviewing what happened previously. So you will usually get your answers what happens in the previous. So pay attention to that and make notes of it. So let's look at where SPY is, what we have in the weeks coming up. everybody thought we will break the June lows. However, we did not. We are still a couple cents off from it. So this week, a lot of things are pretty bottomed out, and a lot of the indicators, if you put your RSI, MACDs, so many things are bottomed out. So we might have a bounce, whether that bounce happens tomorrow or happens this week, Tuesday, or we are sideways and slowly grinding our way up and then pull back. I think whatever the pull up is gonna be, it's gonna be the strongest pull down then. I don't think so. We are out of the woods yet, that we are done dropping and this was the low of it. Whether that low comes in October, November, I don't know whether we get the low in, in the next week or so, but I truly believe we do have more room to come down to it. Again, I could be completely wrong. I'm just going by what I have seen, looking back at the previous charts or going back to 2008, 2018. It seems like history does tend to repeat. We are definitely in a demand zone as well. So any bounces from here, I'm first watching to see how it reacts to this trend line. And then next, for me to be bullish, I want to see if we are going to start to break above 374. So level by level, I'm watching the 374 breaking at 378. Then I got the 382, 388, and so on and on going upwards. If we are starting to break below this, and then I'm going to go up to my monthly. And when I'm looking at my monthly, this is my next demand zone on the monthly. So this is the area I'm looking at. It does get pretty ugly. You're looking at below 312, 308, all the way down to 275. And that's on your monthly. I'm not saying that's going to happen overnight or going to happen next week, but this is what looks like is possibly on the table for it. On the monthly candle, we did close below the 10 moving average as well. Same with on the weekly. If you look at it, we're sitting right at the 200. This is my 200 moving average. Candle did close right on top of it. So I want to see what does this last week of September brings for us. We are going to start to see a lot of the earnings going to start to come out again as well. So we'll see how does that impact the market. So on the daily as well, we are already way below the 200 and way below the 10 as well. So it's pretty far away from the 10. So any pull up, and then you want to watch to see which EMA, which levels we are starting to reject at. Okay. Next is let's look at the VIX. Same thing. I'm watching to see if we can clear this 32.31. Then I have my demand zone in the 35.36. This means market is pulling down and VIX is going up. And the other thing I always tell in the group is no market has bottomed out without VIX going above 40. So we have not had, ever since we've been in the bear market, the highest been is 38.94. So there isn't a market that's been, bear market ended without VIX not going above 40. So something to pay attention to. We're above the 10. We are above the 200 moving average. So look at the weekly as well. You're above the 10. These are the levels that you definitely want to watch. If we are pulling back and market is having that bounce, I'm watching this trend line. I'm watching on the 200. How does VIX reacts to it? If you don't already have your put positions in place, I would wait for these bounces before you start building your positions and build it with the time on it. I wouldn't be playing weeklies with puts or calls. Anything you want to play, I would highly recommend doing it with the time on it. All right, so a couple of the tickers that we went over, I'm going to just go over a few so the video isn't too long. This was the Costco that we looked at it last week, broke the trend line beautifully. And a look at it, we got more room to the downside to the 451. Any move up, a lot of the tickers currently have now gaps left on the daily. So any of these gaps getting filled and gets rejected, that's your entry back into it. And if rest of the market is going to come down to that 300, 275 area, all of these tickers are going to come test these monthly and weekly demand zones as well. And this is where I am looking for Costco to come down to. I even have a further demand on this one. And this is a beautiful diamond as well. I would love for it to come back and a little bit retest the 10 and then break below it. That would be my entry. So I'm going to be definitely keeping an eye on it. And I've been in this play as well. I'm actually holding a couple runners as well. So this one is playing out nicely. The next one is Walmart. So this is our daily. I called it out in the group last week. It was a perfect reject at the 200 moving average. And currently those contracts are up almost 80%, 90%. And we closed below the 10. We are sitting at a very nice, coming up a nice support area. So I would like to see some bounce if we want to add more. Your stop loss has to be above the 200 moving average. If we are moving up, you want to put your stop losses above here so you don't get if you are building a short position on it, or you can wait for it to come back, get rejected. This is where you will make your entry again. So let's quickly look at the monthly as well. The channel's been respected very nicely. It's coming down and has a gap, I believe, on the daily as well. So this would be really nice. And this is your weekly. Daily does have a gap going up. But if rest of the market is pulling back, I am looking for it to come back and retest the bottom of this channel. This is also my demand zone in the 106, 105 area. So with the time on your contracts, this could pay you very nicely as well. Or I like to be patient. I like to wait and see if it comes back. In a bear market, it is really hard to hold calls sometimes. So it's best to wait and let the move, make the move, come to the gap, let it reject. That's where you make your entry and write it back down as well. The next one I want to add to it is Square. This is the daily chart, and I have this channel on Square as well. It is in my demand zone, and I've been making notes of the dark pool prints that have been coming up. So we had a dark pool print of 49 million at 56.30 and 5.3 million at 55. So for me to make an entry, I want to see if the candle can get back in. We did close a very nice candle on Friday. If we can get back in this channel and stay above the print of 56.30, that's my confirmation. I can jump into a call. With the stop loss, I would probably put it below somewhere in the 53 to 51 area. But if it is continue to break below, I wouldn't touch it. I think the bottom for this could be at 48. But if you look at the monthly, we might be headed back to, even more lower pain for this thing. So definitely watch these dark pool print levels, how it respects. So if it does get back in the channel, we start to move up and market is moving. You do have a room up to $65 to take some profits on this one. And then next one is Run. Has quite a bit of a nice gap that it needs to fill on the below side of it. We are getting rejected at the 200 is where we, not getting rejected. Sorry, we gap down and we're below the 200 moving average. So if we have a bounce and we reject at this trend line, you got a very nice room up here. And the contracts are pretty cheap. Even if you look at the end of 2023, has a nice room to fill to it, especially this gap is beautiful. However, if it gets back into the channel, I would definitely wait for it to either reject at the 37 or at the top of the channel before you jump into a put, unless you're, building a position. That's a different story. All right, the next one is, I think we looked at Google last week as well. So this is the daily. Google actually, let me actually pull up the weekly news. Yes. So we are in candle closed right above the 200 moving average, and we are right in the demand zone as well on the weekly. However, candle closed below my demand zone. So I want to see how this is going to react. If we can bounce from here, get back in this demand zone and start running, because XLC is the is the ETF that I have on my list that should be starting to have a money rotation. So I'm looking for Google, Netflix, all of these to start running. So I'm watching this one. So if we can move from here, I think Google has a nice room to back up to. You could look at anywhere from 107 to 111 area. That would be a nice $10, $12 move that you can capture going upwards. And on the daily, it definitely bounced from a very nice support that it held. Nice candle closing. Actually, it filled the gap on the daily. So there was a gap right here. It beautifully filled it. We're holding. And if we start to lose below 97.40 at any point, your bottom is 86.37. So that's what you're looking at. Any of these rejects, so you can play both ways. You can play the calls for bounces, just making sure your stop losses are where it bounced from, at least by a couple more cents if you have time on it, just so you don't want to get a faked out and kicked out of your position. Or wait for any of these rejects and then write it back down. So that's another way to play. And then let's look at Netflix. Netflix is another one. It's holding my trend line. If you go back to the previous video, you'll see this trend line is holding nicely. It did close above. It is below the dark pool prints that have come in. However, this is the sector that should be starting to see a rotation. Again, I could be wrong. Just watch the charts, what it happens. We are in a demand zone. So I'm definitely watching this one to see if I can get a position in, because it has the best gap that it needs to fill going upwards. If the market is moving, this would be a nice catch. However, if we start to break below the 213, 210 area, we got a room all the way down to 163. So that's what I am watching on it. And then let's look at the XLC. Okay, so XLC also broke below the demand zone. However, it is also sitting at a really nice support area right here. And we had a 30 million in dark pool print at 48.94. Currently, we're trading above it. So I'm going to use this 48.94 as my support area. And as long as we stay above, it has a room to continue to move up. You can go level by level and take your profits. And along with it, you'll see your Netflix, Google, and Roku. All of those things should be moving up. However, if we start to break below 48.53 or 48.94, this is my next demand zone, which is $39 to $44. So that's what I'm watching. I really hope these videos are helping you guys. If you like it, please do comment below. Let me know if there's any questions, or if there's a ticker that you want me to do, you have a questions on, or you want me to chart, please feel free to ask, and do like and subscribe our channel. Thank you.